Well, it is 10 o'clock, so we're going to go ahead and get started. My name is Josh Soltzman. I'm the CFO at Plains Commerce Bank. We just want to say we're excited to have an opportunity to share a little bit with you all about the PPP loan forgiveness process. And I think the biggest thing here, as you can see on this slide, it's what we know with a big emphasis on for now. I just want each one of you to come away with something that's hopefully helpful for you, whether it's making the right business decisions, or if it's learning how to better calculate a necessary item. So that's kind of what our goals are for today. I'll allude a little more to that. But before I get too far into our presentation, I'll got to make sure I let you know that these are the opinions of myself and any other presenter that will talk today, and they are not for legal purposes. We will do our best to interpret the SBA guidance and Treasury guidance as we have it in front of us now. And this just gives you some contact information. Again, this slide presentation will be sent to you after our meeting here today. And we do have a question and answer section at the end. If you would like to, you should be able to see on your screen a question and answer area. If you want to submit questions at any time during the presentation, feel free to do so, and we'll get to those at the end. Then a little bit more about the agenda. We'll go through the loan forgiveness application that was issued back on May 15th. And then we'll also go through the additional guidance in the form of 2 IFRNs that were issued on May 22nd. Conveniently, both the Treasury and the SBA like to rec weekends, so those were issued on Friday afternoons, giving us the enjoyment of reviewing those throughout the afternoon. So we do expect potentially even additional information in the form of question and answers that will be issued today. And again, we'll continue to update you on those as well. But a little bit more on the really goals for today. One of the things I don't want to do is get too far into the weeds of the calculations. We will at later times, as we get more information, be willing to provide tools out to help with that. We want to give you a really good framework and an understanding of where are we at today, what could change, what are we still awaiting, and then also give you the right tools to make the good, sound business decisions for your business and where you guys are today. And then also answer any questions you may have. So again, as I said, on May 15th, the SBA issued the actual 11-page loan forgiveness application. This application was much more thorough in terms of the instructions than the first application it was to borrow. That application was supported by 10 plus other documents that the SBA and Treasury have put out. This document really tried to give definitions and instructions on how to fill out the various sections, which we'll go through in a little bit here. However, one of the things is they introduced many new topics or calculations of which they gave very little clarity to. So there was a lot of questions surrounding many of the things that came out on May 15th. Here is the top of the forgiveness application. This is the key thing to see up on the top is that you're working with OMB control number 3245-0407. So if you are looking for it, here's the website that you can go to it. And if there is an updated version, it will be updated on the treasury.gov website. The other reason I show you this page is there's some information on here that, this whole PPP loan process has occurred very quickly. And you may not have all of the things that you remember. So we will be providing you the SBA PPP loan number, the lender loan number, which would be Plains Commerce's loan number, your loan amount, and then your disbursement date. And we'll be doing that either through a mailer or email, and I'm not sure if we've decided exactly on that, but those should go out next week to you, so you'll make sure you have that information. If you don't receive that, or you do have additional questions, you can reach out to the loan officer you work with, and they should be able to get you those information. The other thing is the very top section, which goes through your business, legal name, address, and other items. Please be sure to make that as consistent as you can with your original application, so that it's the same borrower name and EIN as you filled out on your application. We'll jump from there into what were some of the topics, major topics that the application brought up. It brought up how to calculate the average wages and salaries, and it introduced this topic of both paid and incurred, which we'll go through in some detail throughout. It also gave a number of more examples and clarifications to the payments to owner employees, as well as self-employed, and how to go through that process. It introduced a new calculation of how to calculate FTEs, which definitely was a new calculation and will likely need to be calculated separately to any previous calculations that your business may have done. And then it talked about two topics of potential reductions, which would be a reduction in FTEs and a reduction in wages and salaries. And then also safe harbor provisions related to both of those. And then it also went over and clarified eligible non-payroll expenses, and again introduced this topic of paid and incurred. And then on page 10 of this application, it did a very good job of highlighting the documentation needed to provide to both your lender and that you need to retain internally. And then what I like to do is kind of start at the end, and we'll work our way back. So the reason that I show you this slide is the very first section of the page 3 of your application, which I showed you. On the bottom of this is where it calculates the amount that you have allowed for forgiveness. And it is the lesser of these three numbers, which obviously your first one would be your loan amount. And then the next one would be your amount you spend on payroll and non-payroll related expenses, less any of the penalties related to FTE reductions or wage reductions. And that is calculated on there. And then the final one is the unique one. And this one is, it takes the amount that you spent on payroll and divides that by 0.75 and says that's your maximum. And the reason that's important and caused a lot of businesses to rethink things is if you spend less on payroll, it actually reduces the amount that you can spend on non-payroll as well. A lot of interpretations early on where you could spend up to 25% of your loan amount on non-payroll expenses. And in this calculation, for example, if your loan was $100,000 and you did not spend $75,000 or 75% on payroll, it would reduce the amount that you could spend on non-payroll of $25,000. So again, this was pretty substantial, and it led some business owners to say, well, in order to maximize my non-payroll expenses, I better hire people back or do something to maximize that forgiveness. And we think with a lot of the changes that are coming potentially from Congress, this is something that needs to be considered very strongly by businesses on how to proceed. Then here's some of the details that came out in the forgiveness application. It did come out and tell us that both bonuses and hazard pay, as well as wages paid to employees not working or furloughed, would be included in the cash compensation with a limit of $15,385, which is essentially 8/52 of 100,000. The big key on that is there's a lot of businesses who have employees at the front lines that they were hoping to pay hazard pay or bonuses and have that included. This did ensure that that is included in your payroll amounts, as well as wages to furloughed employees that would not be on unemployment. It also introduced this billing cycle, alternative billing cycle, and it also ensured that we were allowed to go past June 30 for the forgiveness period, which it was often in question. And as bankers, we get on many calls with people from Congress and our two senators here in the state of South Dakota. We were on calls, and they were very adamant that the bill and the act was meant that no expenses past June 30 are forgiven. And so I think that was a common thing that was discussed early on, and that is not the case. So your forgiveness period truly is, again, at this time, the 8 weeks after your loan is funded. It also gave much more clear calculations on the FTE and wage reductions, as well as the exceptions that you're allowed. And then the amount that you can get forgiven, here's just kind of a really big picture view of what you can do as a business to make sure you have the maximum amount forgiven is keep or maintain your FTE levels, maintain salary or hourly rates at least a constant level. Don't have pay decreases, and then spend the 75% on payroll and your 25% on non-payroll. That's obviously and has been always the case for those. Again, the biggest thing to remember is there are a lot of changes going on, and understand, especially when it comes to FTEs and the 8-week period, we may see some leniency on that. The other thing that was a pretty new or different term that came out is it changed the covered period to it gave you a second option for payroll purposes. And they defined this as the alternative payroll covered period. This is defined as the first day of their pay period following the PPP loan disbursement date. And we'll go over an example of that on one of the next slides so you can look at it for your organization. And they did this for administrative convenience. However, this option, the one thing to remember is it's only available for those borrowers who have payroll at least biweekly. So if you pay weekly or biweekly or even more frequent than that, you can elect this option. If you're a semi-monthly or monthly payroll, you cannot. A question we've received quite frequently is, what if I have 2 payroll cycles? One is at least biweekly and one is potentially monthly or semi-monthly. We recommend a consistent process. There is nothing that in the guidance that says you have to do that, but as a bank, we're saying the best thing you can do at that point is then adopt the traditional covered period defined as the 56 days after your loan disbursement date. Then there's been some confusion on disbursement date. If you did, in your case, receive a cashier's check or anything like that, it would be the date of the check. If you received an ACH, it would be the date that was put into your account for the disbursement date on that, and that would start that would be your first day of your 56-day period. And then before I get too far into some of the payroll things, one of the areas that I want to touch on is the 4 major areas that we see as in the forgiveness application, and then also the different sections within there. The payroll loan forgiveness application has 3 different areas where you have calculations. You have a loan forgiveness form, which is on pages 3 and 4. Page 3 of that has a lot of your calculations that come from other areas inside your application. Page 4 will be all of your certifications as a borrower that you did everything correctly, and you'll have to look at those representations and sign off similar to you did on your application the first time. The next section is Schedule A, and this goes through a lot of your payroll detailed calculations and includes that. And then you also have a Schedule A worksheet, which if you have a lot of employees, you have to list all of them there. that document, Schedule A worksheet, is not actually required to be provided to your lender, but must be maintained. So there's those three main areas of the application. However, we see it really split into four, what we call different types of calculations. And the first one being the payroll costs. And we'll go through that section first. And then it's your non-payroll costs. And then there's two sections around adjustments, and those would be FTEs and wage reductions. And so that's kind of the order of the presentation. Is we'll start with that first area, payroll costs, then we'll go to non-payroll costs, and then we'll go to those two adjustments that are included. For payroll costs, anything that is paid in your covered period or the alternative covered period would be allowed to be included. And then anything that is incurred at the end of your pay period, that is the portion that is incurred and paid on your next payroll cycle is also allowed to be included. And so we'll go over this again on the next slide as an example, but this seems to allow more than 75 or more than 56 days for payroll. And I think that's one of the major questions that they have not come out and answered as solidly as we would like. They have done that on the non-payroll costs, but I think most of the people in the industry, when reading the application, were not thinking you had the option of more than 56 days. And I would think most of the calculations and documentation that I've seen now believes that you will be allowed that. A couple other items is cash compensation is capped at the $15,385 per employee. As was the case when you applied for your loan, any payments to independent contractors are not included. And then, as we discussed previously, the appreciation or hazard pay would be included. And then non-FFCRA sick time. So if it is FFCRA sick time, that would not be included, but any other sick time, vacation, or others would be included. And then your employer portion of your health insurance premiums are covered, however, not workers' compensation premiums. And then your employer contributions for 401k and other retirement accounts are covered. And one area that we've seen discussed frequently among some of our borrowers is, what if I have an annual match that I do at the end of the year? How can I do that? I think the best thing is to look at your plan document and see if it's required. If it's a required match, you can, and if it's based off of the payroll, you can calculate reasonably what amount you incurred during this 8-week period. Or if you do a fixed dollar amount at the end of the year, I think a lot of this will come down to borrower discretion and proving that why it's likely that this expense has been incurred in that period. And given an annual cycle, your next time to pay that will be in December. And so again, it will be up to the borrower to kind of walk through that portion of the calculation. And as was the case when you applied for this, state and local taxes assessed, most notably to be unemployment taxes, are included, and then federal taxes, Social Security, Medicare, any of those, again, will not be included. So here's probably one of the more important things I want to go over today, and this talks about this covered period. For purposes of this slide, we're going to, it does show it in what we call the normal covered period. So in this case, the loan disbursement date was April 20. So the 56 days is April 20 through June 14. And so your first payroll payment date after April 20 was May 1. And because this was paid in your covered period, it is all able to count, even though your payroll incurred date was April 12 through April 25. And then your next 3 payrolls would be both paid and incurred within your period. And again, you can't double count those, but all of those wages would be included. And then this last payroll that the period runs from June 7 to June 20 would be partially incurred, and then it would have to be paid on the regular scheduled payroll date. So if you're doing the math and adding these all up, your first 4 pay periods would be 56 days, 14 each. And then you end up picking up an additional days from June 7 to June 14. So you end up with an additional 8 days there. So obviously you're going to have more than the 56 or 8 weeks payroll. Again, but you will have to stay at the 15,385. So that's the way we understand the guidance today, both in the application and then more importantly in the interim final rules that were issued with respect to the requirements for loan forgiveness document that walks through this. The one example that I want to go through on this is if we did choose to elect the alternative covered period, how that would work is your first payroll day of incurred after your loan funded would be April 26th. So the loan was dispersed on April 20. Your first pay period start date would be that April 26th through May 9. So you would be able to start your alternative covered period on April 26th. What that would do then is extend your period out past July 14 to July 20, which would then give you more days, and it would give you a full 70 days because the entire last payroll period would also be included in there. And as you paid one on May 1, all 5 of these would be able to be included if you use the alternative covered period. So again, I know this is a new topic. This is probably one of the bigger things to consider. For many of you who got your loan in early April or mid-April, you're a long ways through your cycle of 8 weeks. This is something to look at. Look at how your payroll cycles fall and start to track this. One of the other areas that had a lot of changes, and again, there's a little lack of clarity on some items here, but I'll go through what we believe is the case on the owner employees, and then also the owners that are categorized as self-employed or partners. So we really see this as being broken into 3 different groups, and this is highlighted. If you want to write it down, would be on page 11 of the interim final rule titled Requirements to Loan Forgiveness. That is the page that really breaks down this owner compensation area. And the way we break it down is this. You have owner employees. The way we believe that to be is an owner who receives a W-2. So this could be an owner in a C Corp. It could be a multi-member LLC. It could be lots of different things. So if you remember when you calculated or you did your first application, it asked you what type of entity you are. We believe that the owner employee is really any employee who's receiving a W-2. Then with respect to that employee, then you can include employer retirement and healthcare contributions in your 2019 payroll amount. And the reason we say that is we'll learn here in a minute that you cannot for any of the other owners types. It is limited to 8/52 of your 2019 pay, or that paid during the covered period. So what we believe this to mean is if you made $2,000 a month as an owner employee in 2019, that you cannot pay yourself a higher wage than that and get it forgiven in 2020 during this covered period. And this is actually done on Schedule A inside of your application. On Schedule A, line 9, this is where it has its own area for all of your owners to break this out. And so I think this will be an area that you'll have to go through and look at and limit the forgiveness to the amount of your 2019 pay. The one area that we're uncertain on in this, and we feel needs more clarification on if the employer retirement and healthcare contributions count towards this limit of the 15,385. It is uncertain or unclear if that is included in that area or not. Then when we move to self-employed, a sole proprietor, single member LLC, we define any one of those groups as somebody who fills out a 1040 Schedule C or F. If you read the guidance, it will only ever refer to Schedule C. However, you can interpret Schedule F can be substituted in there at any of those times. In this case, you will be able to rely on your Schedule C or Schedule F net profits, and you'll be able to essentially pay yourself 850 seconds of that as forgiveness. Then the big piece there is you cannot choose to pay yourself your whole loan amount. If you maximize your loan amount, you would only get 75% of that approximately forgiven under this method. Then for general partners, this is a group that we saw a lot of change early on in the process. If you were a partner, it was assumed that partnership wages were not allowed to be included. It came out later that it was, and then it again came out even a third time with referencing if you previously applied for a loan and want to go back and request additional funds, you can do so until your bank has filed a Form 1502. So if you are a partner in a partnership and you receive wages that show up as self-employment, which would be on box 14A on your K1, you can get that box 14A times 0.9235, which again, that is because as a partner, you're allowed to you're allowed to only pay 1/2 of your self-employment taxes for both Medicare and Social Security. So this is reducing your box 14A to 92.35% for that. So again, you'll take that amount times 850 seconds, and that will be the owner compensation for that owner that would flow through on line 9 of the Schedule A. And again, as I said earlier, healthcare and retirement costs attributed to partners or self-employed are not forgivable. If you did apply for your loan and assumed that these were forgivable, you don't have to go back and change your loan amount, but you cannot request forgiveness related to those two items. Now we'll jump through and jump into the non-payroll area. A lot of this is very similar. I'll kind of go through some of the differences. In the mortgage obligations, again, you have to prove that this mortgage obligation was present prior to February 15, and then you can only get the portion of your payments related to interest. So that's the key there. Then it would be both incurred and paid, again, in that area. For rent obligations or lease obligations, the big change there is that it said both real or personal property leases. So the most common one that you'll see in a business could be you have automobiles that you lease. The full payment on that automobile would be allowed to be deducted as forgiveness under this portion. Also similar if you lease copiers or other things. The one thing that would not be included in there would be a software type of lease, as that would not be a personal property defined by IRS. So again, this opens up a lot of new potential expenses that are forgivable in that non-payroll category. Then in utilities, it defined more clearly what utilities are out there: electricity, gas, water, transportation, telephone, or internet. And again, these would have to be services that were in place prior to February 15, 2020. One question we've received is, what if I change my internet provider or changed something? If you show us the previous provider that you had and then switch, we believe that that is sufficient. Similar, if you were renting a building and due to COVID ended up downsizing, we think if you had rent obligations prior to February 15, if you have a new and different rent obligation now during your covered period, we think if you show that, we as a bank believe that is sufficient. And then this allows for both the paid and incurred method, and we'll go through that in greater detail. One thing to remember on non-payroll expenses is if you are a Schedule C or Schedule F borrower, self-employed, you are only allowed to deduct these expenses to the extent it was claimed on your 2019 Schedule C. So if you are requesting forgiveness for electricity, gas, water, rent, mortgage obligations, please show where those would be or document how they were deducted on your Schedule C for 2019. Again, here's kind of an example of going through this as to what it looks like for utilities. We believe that, again, you'll be allowed to have far more than 56 days included in this. Under this example, we've kind of flipped it from the payroll and started early in the process. So on this one, we're paying for April's rent on April 1, which is very common. On April 1, we've paid our rent, which would be partially incurred from April 20 to April 30. So essentially those 10 days of April, we could include those even though we paid them outside of our period. Then the rent for May would both be paid and incurred, and we could include that entire one. And then the rent for June is paid on June 1. We could include that entire one as it is paid on that date. So again, you know, May and June is 61 days, and then you're going to get an additional 10 days in April. So in this scenario, you have 71 days of rent. You could also look at this in retrospect and say, if we were paying April on April 30 and May on May 30 and June on June 30, you'd have a similar example of what we went through before, where you would be able to include all of the first and second one and then a portion of the third one. And then one area I will mention is with respect to this, on page 12 of the alternative, or page 12 of the IFRN, called Requirements for Loan Forgiveness, is a really good example, and it walks through an electricity bill example, which clearly states that we can use more than 2 months of expenses in this area. So now we'll jump kind of into the deductions part. Again, I won't go into great detail of all of the calculations. This is one of those areas that we saw a huge change. For any of you in the HR areas that regularly calculate FTEs, the most common hourly method that we use is 30 hours, because for ACA reporting, anything over 30 hours is considered a full-time employee. That is not the case. So the full-time is defined as 40 hours. And the application itself on page 7 outlines the calculation. And the calculation is done on an employee by employee level. And so you look at each employee and you figure out their average weekly hours and you divide that by 40. And you round that to the nearest 10th with a cap at 1. And what that cap means, if I have one employee who's working 60 hours a week, even though 60 divided by 40 is 1.5, no single employee can count for more than 1. And so you can't just take total hours across your whole employee force and do it. You have to do this at an employee by employee level. The other option that you can do for FTEs is what they call a simplified method. And this says any employee who works 40 or more hours per week or is exempt salaried as well would be 1. Anyone who works less than 40, whether that be 39 or 3 hours, would be 0.5. Again, we recommend you go and calculate both methods and determine which one would be a better outcome for you in terms of FTE reduction. The reason this can be a big deal, if you have a lot of people that prior to COVID were working 30 to 35 hours a week, that was their standard week, and during your covered period, you were less busy and you decided most of them were working 15 or 20 hours. In both of those scenarios, even though they worked less hours, under the simplified method, they would count as 0.5. If you rounded to the nearest 10th, each employee that was reduced in hours would see a reduction in FTE. So that is the reason that we recommend calculating both methodologies in this area. If you have previously done an FTE calc and you did not use this, please go back and recalculate under these 2 areas. Then I'll kind of walk through a really quick example of how this impacts your potential forgiveness. In scenario 1, the 2 reference periods is what we call them, is what you're comparing your FTEs to, are February 15 to June 30, 2019, or January and February 2020. So in both scenario 1 and scenario 2, the number of FTEs on a monthly basis were 10 during the 2019 period and 15 during the 2020. So in both cases, we would use option 1 as this is the lower of the two. And then in both cases, the crisis hit and we reduced our FTEs down to 5. And in scenario 1, as soon as we received our PPP funds, we hired back up to 10 FTEs for that 8-week period. Under this, you have no penalty, and 100% would be allowable related to FTEs. In scenario 2, when you receive your PPP loan, you hire back some additional staff, you end up with an 8 FTE average during this 8-week. That would result in a 20% reduction in your total forgiveness amount. So if you received a $100,000 loan, the maximum forgiveness would be $80,000. One area to look at here, and there's been some new guidance on this in the IFRN, is a common thing that's occurred amongst a lot of our borrowers and employers in many parts of the country is employees are nervous and they request less hours, or they resign, or somebody's potentially fired for cause, or you try to rehire somebody and they say, no, I'm happy on unemployment, I'd like to stay on unemployment, and they reject your offer. If this is the case, please document this. And if it is a rejected offer, the one thing that the SBA came out with that was new in the IFRN is you have 30 days to notify your state unemployment agency in order to count this as a exemption from a reduction in FTE. So that is the key there. The SBA did say that they plan to issue additional guidance on how best to do this. However, unemployment is done and gathered at the state level, so I think this will be unique at each state level. And again, if you do plan to do this and you had a lot of employees who rejected offers, remember that when you go to the state and you say that you gave them a qualified offer, what that does is it disallows them from receiving future unemployment benefits. This is again an example that we walk through to give you the math behind it. In this case, the FTEs during that covered period are 103.5, and during the covered period, or the reference period of February 15 to June 30 in 2019 was 110, and again it was a 115 in 2020. Similar to the first example, we would choose the 2019 reference period because that number is lower. Based on the calculation, we would have 103.5 divided by 110. We would have a 6% reduction, which turns into a 94% allowable forgiveness amount. In this case, if you had a $2 million loan, maximum forgiveness would be the $1,881,000. I'll briefly go through the safe harbor, but I know this will not apply to very many people and is likely going to change substantially in its measurement period based on some of the things that are going on in Congress. So I will breeze through this very quickly. If you do fail your FTE test and have a potential reduction, you have an out. In this safe harbor says, if you had more FTEs on February 15 than your average from February 15 to April 26, you can move to step 2. And one thing to clarify on that is, I've had people say, well, how do I calculate my FTEs as of February 15? It's the pay period that encompasses February 15. So whatever February 15 pay period falls in, it's that pay period that you go look at it. So if you're every 2 weeks payroll, you take that 2-week payroll, you'd figure out the average weekly hours, and you'd do an FTE for that period. Again, this gets very cumbersome, and so for many of you who potentially haven't reduced FTEs or won't need this, this is again requiring a lot of additional FTE calculations. However, if you do meet that first test, then you can come back and say, how many FTEs do I have as of June 30? If that is greater than the amount that I had as of February 15, then I can have 100% forgiveness, again, based on the FTE method. As I said earlier, there's two areas to get a reduction. First is FTEs, the second is a salary reduction. I'm actually going to kind of go through these slides, or not go through all of these slides, as I don't believe this will impact very many of our customers at all. And the reason is, in talking to them, is if you are looking at an hourly employee, you are looking at the hourly rate. So if somebody made $15 an hour pre-COVID, but was working 40 hours a week, if they went down to 20 hours a week, but we're still making $15 an hour, this reduction would not matter. It's looking at that $15 an hour rate. And based on the tables or the employees, this only looks at employees that are not owners and then did not make at least $100,000 in any one pay period annualized last year for 2019. So if somebody's a highly comped employee over 100,000, even if you did reduce their pay, it wouldn't matter. This would only look at that. And so for the fact that we don't believe very many of our businesses reduced the per pay period or the per hour rate, we'll kind of breeze through these, or won't really hit on these slides here. But again, there's a complex calculation and then also a safe harbor for that. And again, I know it's Friday, so I'll do our best to leave some time for question and answers at the end here and get you off earlier than the 90 minutes we have scheduled. The big thing that I want you to look at as business owners that will help both you and the bank is page 10 of the forgiveness application. This page outlines those items that are necessary to provide to the bank, and also some of those documentations that you need yourself. This area, it does say that you need to keep these items 6 years after the date the loan is forgiven or repaid in full. So if your loan is partially forgiven and you use the full 2 years to repay it, after that loan is fully paid off, you need to retain that documentation for a full 6 years. If it's fully forgiven, whatever the date of forgiveness is, you have to maintain it for 6 years from that time. So be sure to keep these documents in a safe spot electronically if you can. Rather than, again, go through this in great detail, I think page 10 does a really good job. I'll let you go through that. One thing I will say is organization is going to be key. If you think back to your application process, the number of documents you may have needed to provide to the bank was very minimal in comparison to those documents that you have now. And so documentation will be critical. But one of the items that it does go through is proof of payment of these things. So if you are paying non-payroll related expenses, utilities, or interest payments, you can't just provide an invoice. You have to provide proof of payment. And as most of you have accounts with us, we still ask that you provide a bank statement and highlight those items that relate to this, as it will save us a lot of time on our end. So if you are using any expense, please document the proof of that payment in order to get forgiveness on that. The other area that I'll briefly touch on that we'll get to more in a second is that we will be providing a checklist to assist you in gathering your documents and ensure that we have the maximum amount of forgiveness or maximum amount of consistency amongst our applications as we can. As having 800 of these loans is it will be very critical for a consistent process for each of our borrowers. Then this is kind of one of the big areas that I want to talk about. As you guys have watched the news yesterday, the House did pass the PPP Flexibility Act. This slide has not been updated from previous areas or things going on, so it may not be perfectly up to speed, but one of the major areas is the PPP Flexibility Act allows forgiveness to extend past the 8-week period to up to 24 weeks. And it also extends the PPP loan process allowed to grant a loan through December 31. However, it does cap the forgiveness period at December 31. So if you were to get another PPP loan at a different business in November, let's say, you can only use expenses through the end of 2020. And again, they're looking at lengthening the term of the loans from 2 years to 5 years, and then also look at reducing the 75% payroll requirement down to 60%, or eliminating it altogether. Again, this is the slide that at one time we've had various forms of PPP new bills coming. We had Senate versions and House bills. It looks like the column on the far left is what we currently have. The column on the far right is the one that's most closely relevant to the bill that was passed by the House. One of the big areas, obviously, that I hit on was up to 24 weeks. The other one is the original act said it capped the period at 10 years. However, Treasury subsequently capped that at 2 years. This new act is looking at limiting the minimum amount of years to 5. As a bank, we have no idea how this would look in terms of redoing loans and documentation. It may be something that we have until the end of this year to look at the forgiveness amount and do that. We don't know how that would take place, but they are looking at extending and making it a minimum amount of 5 years for the amortization of this loan portion that would not be forgiven. And then there's a potential elimination of the 75% necessary to spend on payroll expenses, and reducing that potentially to 60% is what I've seen, or eliminating altogether. So this is where, what does this mean for you as a business? You know, this is something where each of your businesses, as an owner, you are the most qualified person to make the decisions for your business as to what this looks like and what business decisions you have. When this forgiveness application first came out, there was a lot of concern of, if I don't spend 75% on payroll, I lose the ability to spend 25% on utilities, mortgage, interest, and rent. So we had a lot of people try to hire people back or do bonuses. You know, with this likely to extend for 24 weeks, I would encourage each of you as the business is make good, sound business decisions. If you have employees that are able to be productive and they're necessary to work for your business, do that. If you're paying people just to pay them, or you're paying large bonuses because you're trying to maximize your forgiveness, I think you need to take a really strong look at this. There's a lot of borrowers who are looking at ramping up payroll and FTE numbers. And so I think before you do that, I would make sure you're very well versed in the bill and the act as it comes out early next week is our likely estimation. And then what can you do today? You know, I think because of all these changes, if you look at the application we have in front of us, it's going to have to change. Obviously, everything is referring to an 8-week, 56-day period. This application cannot stick around if we see the changes that are referenced in the new act. So what are some of the steps that we think that you still can do and should do? The biggest thing of that is review the application and the 2 additional IFRNs in their entirety, understand what they look like, determine, is my business going to get 100% forgiveness even if we don't have this new bill? Then it won't matter. But have a big focus on page 7 with respect to the FTE calculation. And even in all of the new act, we think that the forgiveness or the FTE calculation still will maintain as the same calculation, and you still will have to have the average FTEs reach that of your reference period. So first step is go back and calculate your FTEs in both of those reference periods. And you can see there is a third option if you are seasonal. Any 12-week period from May 1, 2019 to September 15 is also allowed. The next one is look at page 10 and start to gather that documentation. Many of the people on the call today probably received their loan in early April. mid-April. You're a long ways through this. You've paid a lot of utilities, a lot of rent, or a lot of other expenses that you can go back and get invoices, proof of payment. And the other thing is for each one of those services, you'll have to prove that that service was in existence as of February 15th. So you can go back and get a bill from February for all of your utilities, all of your loans, and anything that you're using as a non-payroll expense. That would be one of the biggest things that we recommend. The other area is if you are a larger business that has 10 or more employees, we recommend that you call your payroll provider and determine what are they doing to assist in the calculations. Are they creating reports? Are they creating something where you can tell them what your reference period is and they can do your FTE calc? What are they doing? A lot of the larger companies in this space are doing a lot to standardize these reports. So again, we recommend you call them and discuss this with them as soon as possible, so as to understand what they're going to be able to generate. And if they're not generating things, making sure that you're retaining those properly as you go. Again, the last thing is get organized. This process is going to be a lot of work, but if done correctly and organized, we believe it can be done very successfully and can maximize your forgiveness. Again, this may include both your accounting and HR teams. Your HR team may have to, when they send out offers, they may have to document if those people turn those down and do things like that. So the sooner you discuss the various portions of this act or bill and forgiveness with those departments, we believe the better. Then the last piece before we get to the questions and answers is, what is Plains Commerce Bank doing? You know, Plains Commerce as a team, we couldn't be more proud of the way we reacted and stepped up during this process in terms of doing these loans, and the forgiveness is no exception. We plan to be there as an expert and help you as much as we can throughout this process. We are creating a team that will field and answer these questions. This team is likely going to be smaller than the team that was doing the original loan issuances. Reason being is this is a more complicated process, but it will also be a longer drawn out process. So that team will be there to help you. The best way to get a hold of them or ask questions is submit your questions to cares@plainscommerce.com, and we'll get back to you. Again, we'll use our website as a place to post additional guidance as it comes out. And then, as referenced earlier, we will send out either a mailer or an email. I'm not sure how that will come yet, with your SBA loan number, our loan number, loan disbursement date, and also loan amount, as those are items that you'll need on your application. We also are creating a checklist for you to provide documents to us, and I'll briefly kind of take a quick peek at that here. And then we're also creating a tool to assist with the calculation, but due to the likely changes that are coming about, we're not issuing that tool at this time. And if you are looking for an Excel tool to assist with, there are many of them out there right now, but having been through several of them, I would say the best one at this point that I can recommend is the one that is with the AICPA. Again, I'll briefly show that to you here in a minute, but you can Google that as AICPA Loan Forgiveness Calculator and find that. And then when you do gather all your documents necessary for forgiveness application and complete that application, you can send that information to the lender you work with, and they'll submit it to our team of people reviewing those. And then we have, at that point, 60 days to get back to you. Our goal would be sooner, but again, due to the large volume, that is the process. And then after we concur or agree or have questions, we submit that on to the SBA. And again, they will have 60 to 90 days to issue their final opinion or payment if it's forgiven. So I'm going to quick jump to the two things that I referenced. This is the forgiveness loan checklist. We plan to put this out next week on our website. What this is it kind of has it laid out in the items that every single PPP loan borrower will need if you're applying for these expenses. Is you'll need the application, and then for those non-payroll items, it outlines exactly what you are looking for. We plan to put kind of a naming convention off to the side here of potentially A1 or A2. That way, when you send in your documents to us, at the front of it, you can put what it relates to. So if you're sending in 20, 30, 40 documents, that we can have them in organized fashion. Then also items needed on loans to businesses with multiple employees. These would be some of the items that 941s, third-party payroll reports, other things like that, that may only be relevant if you have employees. And then we have items on owner compensation. If, again, you have a business that has owners receiving W-2s, K-1s, or self-employed, these would be the items you need to provide as well right here. Again, this is a document that we will plan to share early next week. This is the loan forgiveness calculator that I referenced. The AICPA has, you'll see on the bottom here, a substantial number of tabs. Again, it will allow you to have an estimate if you'd like to. However, I would not tell you that this is something you have to work on right now. I think it's only if you're looking for a tool. Having monitored or starting to build our own, you can see on the top here it says draft as of May 28th, which is yesterday. This is their 5th iteration of this document that's changed. They had one that came out subsequent to the payroll, just the application, and then with all of the new documentation coming out, they've updated it an additional 4 times. Again, the reason that we're going to try to wait till next week to issue anything on our end. So I've done a lot of talking, and now we're going to transition to you guys having a chance to ask questions. So if you did not ask your questions and still have some, please feel free to do so. They show up in our question box, and so we are going to go through those now if we can. So I'll kind of read them for you guys, and then answer those. And again, we'll do our best to get through all of them. So if you are capped at $15,385 for the loan, you then take the X 75% for payroll. The $15,385 per person or per owner is considered the payroll amount. So if you are, I think this question is referring to maybe a self-employed borrower. If you're self-employed and you made over 100,000 and you applied for the maximum, you could have gotten 20,800. The difference is about 5,400 that you would have to spend that on business interest expense, utilities, or rent. If you don't have those, that portion of your amount is going to be not forgiven. So that's, hopefully that answers the first question there. If automobile is owned by the business, can interest expense be deducted? Yes, that is the case. If you have a automobile that you've purchased and not leased, then you can if you have a loan against that rather than a lease, only the interest portion then would be deductible, whereas a lease, the entire thing. I bought a car through my LLC. Can I add this payments to utilities? It would actually be under rent or lease, but yes, it would be in the non-payroll category if it's in the LLC, owned in the LLC that you're applying under, would be the key there. If owner's health insurance being paid personally, can that be added as business expense along with health insurance for other employees, which is paid through the business? If the owner is any owner that receives a W-2, then that owner's health insurance that is paid by the business could be included, not personally. If you are a K-1 partner, or if you're self-employed and you have a Schedule C, even if you have employees, no health insurance or 401k contributions are deductible in either the payroll or the non-payroll expenses. So again, that one, hopefully that answers your question there. Can an owner officer for an S Corp, which gets W-2, be qualified? And the answer is yes for those wages related to W-2. A common thing as a former or as a CPA myself, the common thing that occurs in S Corps is wages of an owner may be lower potentially, and then you receive K-1 distributions as part of that. The K-1 distribution amount is not eligible for forgiveness in the payroll section or the non-payroll section. Only those wages that you pay to yourself as a W-2, which are subject to self-employment. However, those again would be capped at the amount that you were paying yourself in 2019. So if you decide, well, I want to pay myself a lot more in 2020, again, you'll be capped at the rate that you're paying yourself in 2019. That is our current understanding of that. Again, there are some ambiguities there. We hope to get some more clarifications in the days ahead. I operate my home business. How do I justify a raise in my electric utility bill due to being home more than having more use? I don't think you have to justify any additional. All you have to do is prove that that bill existed and that you were paying that utility as of February, and then you can deduct the full amount during your covered period. The next one does not appear to be a complete question. SBA application requires weekly calculation, but we have a biweekly payroll. Shall we still calculate FTE on a weekly or biweekly basis? So having went through this several times on a couple of businesses already, actually the way I recommend doing it for your reference period is gather the total hours for your entire reference period. So if you're looking at January and February, 2020 is your one reference period. That's approximately 8 weeks. Get the entire period's hours, and then you divide by 8. That will get you your average weekly, and then you can divide that number by 40. But that way, no matter what payroll cycle you have, one of the things again with this is what I've run across is your payroll cycles may not align perfectly with January 1, 2020 to February 29. And if you're not able to get your hours worked in those exact cycles, because the only way you get your hours is through your payroll system, what I recommend is picking the payroll cycles that most closely align with that. So if you're looking at February 15, 2019 through June 30, pick the pay periods that are the closest to that. We as a bank feel that's very adequate, and there are going to be times where the information available to you is not perfect. So we recommend that if you have what I call a punch card system, that you have a timekeeping software that's separate from your payroll, and you can run hours during any pay period or any period, then you can use those exact pay period or exact periods. But again, I would calculate it FTEs on your whole period looked at, and then divide that by the number of weeks is how I would do that. How do we notify the state agency about qualifying offer to their employee? I do not know that answer. The SBA came out with guidance saying that they would assist in that process. However, I know that every state is going to be a little different because they are run at the state level. So I wouldn't know exactly what question or which state you're referring to. I think the recommendation I would have is to call your state agency or send in an email to your state unemployment agency and ask that question. We have employees on maternity leave, and they get state and medical benefits, but we have to give them 12 weeks FMLA, and they are on our payroll, but with wages. In this case, one of the things I've had, with respect to FTEs, we believe that an employee that's out on a leave still counts as an FTE if they're reduced and you're not paying them. We feel like that would still be considered an FTE. The wages that you're paying them, if you're paying them actual wages, those would be included. However, most people, when they go out on maternity leave, will have some type of short-term disability plan that's paying them in lieu of the company. Those would not be allowed to be payroll-related expenses. Only wages that are going to show up on their W-2 would be allowable. as I went over kind of at the end of the presentation, obviously the House's bill looks at allowing 24 weeks and 60% payroll costs. This is going to be a substantial change in that allows you to have your costs much more spread out. I think the next question goes along with this. Do we have to wait for 24 weeks to submit our forgiveness request? Our answer to that is no, we don't believe you need to do that. We think that if you've obtained all the costs you need to have and you don't need to wait for that, we believe at any time you can support 100% forgiveness, you can do that. If you're also self-employed and you say, I'm not going to have any more expenses, if you're somebody who has no utilities, and one of the things to remember on that is if you didn't deduct them on your Schedule C last year, you can't deduct them now. So if waiting 24 weeks is going to get you no additional expenses, we would encourage you to go ahead and file for that application at any time. Is there a spreadsheet that you can provide as a digital file? Again, at this time, we are not providing a calculator. Again, we did discuss that it's available on the AICPA website. If you just Google AICPA payroll PPP forgiveness calculator, you will have one come up. We will provide you a checklist, and if we feel like we have all the guidance we're going to have next week, we will provide that out to you. I am not sure on this next one, how soon can we get the recording of this presentation? You will get the slides yet today, hopefully here in the next hour, and you'll have those. I am not certain if we will be sending out the recording due to the size of that. If you have a strong desire to have that, you can reach out to us at that CARES website and we can try to get that to you. But I won't make any promises on that. I don't know on that piece specifically. If we had an employee resign in February 2020, how would that affect the FTE reduction? Again, if you replace that individual, it wouldn't have any impact. If you're unable to replace that person, you just need to maintain that documentation and you're able to not count that against you on an FTE basis. So it would not hurt you. How is it handled if the utility bill is in the owner's name instead of the business name? I'm going to assume the most likely case of this is if you are a sole proprietor or smaller business that works out of your house or something. As long as you can show us that you've been deducting it on your business tax return, Schedule C prior to that, it will not matter if that's in your name. Self-employed, do payroll checks need to be paid every 2 weeks, and new checks need to be exact for proof? I don't have a perfect answer for this, but our current understanding is if you're self-employed and your forgiveness amount for payroll is going to be based off of your Schedule C from the prior year, you do not actually have to remit a payment to yourself. There will be no repayment. All you need to do is take your Schedule C line 31 times the 850 seconds. However, if more information comes on if you actually have to remit that to yourselves, we will share that. I think the consensus amongst most groups is that is just an automatic forgiveness amount related to the Schedule C and also the partnership wages. Does a sole proprietor take their 2019 expenses, line 28, and the Schedule C and divide by 52 times 8? No, you will use for a Schedule C for your expenses. They will be the actuals that occur in that covered period. Can you explain again how to calculate payroll for self if you are a sole proprietor and file the Schedule C? So it will be as simple as go back to your Schedule C and look at line 31, and you can divide that number by 52 and times it by 8. That will be the amount that you're allowed to get forgiven related to payroll. Can you use more than 75% of the loan funds towards payroll and be forgiven? Yes, that is, you can use more, however, not for self-employed, because that is, you're limited to that 850 seconds of your essentially net earnings. However, if you're a business and you have a lot of employees, and you say we've actually had more payroll because we paid overtime or something like that, you can use up to 100% You just can't use more than 25% on the non-payroll amounts. What records are needed for a self-employed Schedule F payer to show the 75%? It will only be that our understanding currently is it will only be a copy of your Schedule F and then a calculation showing 8/52 of that amount. Can South Dakota unemployment insurance paid to the state be covered in the 25%? And that is, the answer to that is no. Unemployment insurance is not a covered expense in this program. Not sure you answered this or not, but is the payroll for a sole proprietor gross or net? For sole proprietor, it's looking at your Schedule C, line 31. There is no payroll per se for that. However, if you're a Schedule C and you actually have employees and you're paying them via W-2, again, that number would be gross for them. But if you're the actual owner of the Schedule C, you only pay yourself those wages. And it's really, instead of calling it wages, I call it owner compensation replacement. So it's you're replacing the earnings that you would have had over 8 weeks. So that's why you're looking at line 31, which is your earnings, and you're giving yourself 8 weeks of those earnings during that covered period. If we go over 8 weeks, do we calculate numbers? Our funding was May 1. I'm not sure exactly what that question means, but I would say if this final bill gets passed and you have over 8 weeks to calculate those expenses, you'll be able to go out that full 24 weeks to look at covered expenses, both payroll and non-payroll. Since our loan amount was based on 8 weeks expense, if the Congress decides on 24 weeks, can we reapply for the PPP loan? At this time, we don't think it refers to a reapplying or getting more. What we believe it is if your business is not up and running yet and you don't have any payroll to get forgiven, that you're able to potentially wait. In South Dakota, we're probably unique where we are opening up far more than other areas. If you happen to be on a coast or a big city that is not open yet, you may not have any payroll in that. So that would be one area that you can look at. However, what I would say is there's going to be a lot of guidance. You know, the similar to previous things is there would be an act that comes out. We expect it to be later next week. After that comes out, we'll then have likely issued more guidance from the SBA and Treasury, and that will be the telling story of what that means. We do think there is a chance for additional funds in the future. However, that we don't think that's going to be coming next week. Then the last question here is, do garbage services count towards the utilities? And I'm trying to quickly go back and look. I'm not certain that was one of the covered ones in the application. Look at that while I answer this next one. Will you be actually reviewing the documents we send you for accuracy, or just making the checklist is marked? I think the requirement by the SBA is that we, as a bank, make a good faith review of that document. However, we don't have to look at everything. It is the bank making that decision, not the SBA. So that's one critical thing that I know a lot of people have had questions about. And so that's something to understand, is it will be the bank. That's why we're asking for it to be done in a fashion that we can look through the documents and make that decision easier. So that's the first piece there. Then the one other question that I do want to cover that was asked yesterday is, early on in the process for sole proprietors, there were some people that we were thinking the only thing we needed to get was a 1099 for some of those people that are in sales related roles. If you did not provide your Schedule C the first time, for forgiveness purposes, you will have to provide a 2019 Schedule C. And so for some of you, you'd say, well, I don't have my 2019 tax returns done. There was others who didn't provide Schedule Cs because they didn't have their tax returns done. They gave us internal financials. Later on in the process, the SBA said, if you did not file your 2019 tax return, you have to go back and fill out the 2019 Schedule C as if you were doing your taxes. So if you did not provide us your Schedule C the first time, you will be required to provide us that. So if you did not, please make sure you work on that as well if you're a sole proprietor, and Schedule F would be the same. If a full-time employer requests to go part-time after the 8-week period, does that affect anything? The answer would be no there. If you're documenting that, again, you can, if an employee requests to have less hours, again, you can exclude that from your FTE reduction piece. So the one question about garbage, I do not think it's actually listed here. It seems a little ironic, but it does have electricity, gas, water, transportation, telephone, or internet access. Obviously that is not going to be garbage or recycling or those services at this time. I know one of the other common ones I've had is we have a shred service or things like that. I do not believe currently it does give that as an option. So I think I've answered all the questions. If there are any more, I'll give you guys a minute. I'll go over a couple last items. The biggest thing that we want you to take from today is better understanding about the new things coming and how that potentially impacts your business. We really want you to take away is what are the steps you can start now to make this process less painful, and gathering those documents, starting that process, and more than anything, stay informed and stay organized. If those would be the two things that you're able to accomplish from today, that is what we're looking for. The promise that I can make from on behalf of Plains Commerce is we will do everything in our part to stay up on the guidance and issue you guys communication via email or whatever other method that we can. And so we'll continue to do that throughout this process. We ask for patience, as this is going to be a labor-intensive exercise. But as we were in the application process to get these loans, we plan on giving you the best customer service we can do. So that's what we have there. I do think there is one additional question here. I think somebody has raised their hand. I don't think we have questions being, if you do have a question, you'll have to type it in as we are not doing questions other ways. If 60% for payroll will be approved, can we go over that percentage for payroll? Again, yes, that will be allowed to be done. The 75% that is there now is not a cap. It's at least or a 25% is the cap. What going to 60% will allow is you can spend up to 40% on the non-payroll related expenses. You will always be allowed to spend up to 100% on the other piece. There is one other question that was in the chat that I'll answer now. If we had to hire on help that we didn't have last year, as they are included as employee for this program, yes, the people you have employed don't have to be the same people that you had previous. There's no requirement to have identical people across that. So that is something that is a common question. If you've substituted or added new or additional employees, it will not matter who those people are. If you have been paying bonuses for the 8 weeks, would there be any advantage to stretch this out over 24 weeks? If you've already had enough payroll during that 8-week period to get 100% forgiveness, there will be really no advantage that we see at this time to stretch it out over 24 weeks. It would be a circumstance that if you needed additional time to get 100% forgiveness, that's where we would see the benefit. The other things that I will briefly discuss related to that new bill and things that are still in discussions is a question that came up yesterday is the tax impact of this. When the first act came out, it was very clear that you as a borrower getting this loan is not a taxable event. So the loan amount that you get that's forgiven is not taxable event. However, the IRS, in their infinite wisdom, subsequently said, yes, we believe that the loan being forgiven is not a taxable event. However, you can't deduct the expenses that you use for forgiveness. In essence, it's creating a taxable event, because if you use $100,000 of payroll as items to get forgiveness, but you can't deduct that on your tax return, that will leave you with $100,000 additional in net income. We believe that the Congress is very adamantly trying to get this removed or fixed, and the only way they'll be able to do that is through an actual act or a change in a bill. And so that is something that we still have to iron out. But do understand, obviously it's still no reason not to try to get maximum forgiveness, but it could potentially reduce the benefit to 20 or 30% of that benefit having to be paid in additional taxes at the end of the year. Again, if you have taxable income. If I had done 2 bonuses last year, one in July and one in December, can I do the first bonus in my 8-week period since my loan got funded in May? And the answer is yes. I would, if you do plan on doing regular bonuses, I encourage you to pay them in the period because anything paid in cash out in that period, even if it's partially incurred, would be eligible, even though it was incurred over all of the first half of 19. If you pay it in that period, it does count as covered payroll. If we are W-2 employees, do we use W-2 wages and the 850 seconds of 2019 distributions? I believe this question is referring to an S Corp, so I'm not for sure. But if this is S Corp distributions, these are not allowable in forgiveness amounts. Only the amount that you're paying yourself as cash compensation of W-2 employees. And the reason being is these are not self-employment wages. If you look at a partnership level, it's very clear that only the self-employment wages are considered eligible. And so if you are a S Corp and you pay yourself lower wages but do distributions, those amounts are currently not considered forgivable inside the current act. And then the next one is when we applied for the PPP loan as a partnership, we were told that the tax return box for guaranteed payments was the only box that you could use for partnership income. However, it should have been box 14A for self-employment income, so this makes a huge difference. In this case, it depends on when you got your loan, and if the bank has filed for if we filed for 1502. So whoever that would be, I would encourage you to reach out directly after this meeting to your loan officer, or send an email to the CARES group, as there may still be an option. The box 14A was something that came out far later in the process, and that's why they gave you a option to apply for more at a later date. Can we count an employee who works during the covered period towards FTE, even if they stopped working prior to the end of the covered period? And the answer is yes. You're going to do an average throughout that period. So if they were only there for 7 weeks, you would utilize that 7-week period as an average over the 8 weeks. So yes, the person does not have to be there. The way that I see a lot of people doing it is they're doing either an average weekly or an average payroll. So if you have 4 or if you have 8 weeks in there, they're doing it by week, average FTEs, and then averaging that out. Is it too late to apply for a PPP loan? The answer is no. Their money is still available, and we are still processing applications as we speak. What will be the basis on Schedule C, line 31, if 2019 tax returns have not been filed? So if you used internal financials, I believe it was late April, and during the second round of funding, the guidance that came out said if you have not filed your 2019 tax return, you must complete your Schedule C for 2019 and fill it out based on your internal records. So if you are one of those borrowers that provided internal financials, as that is what was considered okay at that time, you are required for forgiveness to go back and fill out your Schedule C as if you're doing it on your tax return. So that will be required for forgiveness. Does the cap of $15,385 apply to Schedule, I believe, C, line 31? The answer is it's 850 seconds of the 100,000. So the maximum you can have on Schedule C, line 31, is 100,000. However, over that 8-week period, it says that you can't use more than 15,385 for that amount. So that does apply to Schedule C, line 31, as the maximum amount counted towards forgiveness. So if you remember, as a Schedule C, if you did not have any employees, the maximum loan amount you could get was $20,800. The maximum forgiveness related to the ability to pay yourself is $15,385. So you'd have approximately $5,400, which can be forgiven based on non-payroll expenses. If we have retained our FTE employees and paid out all of our money during the current 8-week period, can we submit for forgiveness under the current rules so that we don't have to worry about retaining employees for the longer period in the upcoming laws? The answer is absolutely yes. I believe if you are one of those companies that don't see any issue and will get 100% forgiveness based on the current application, I would say there's no reason that you are unable to do that now, and you wouldn't have to wait. What will I do to those employees who are working full-time but on maternity and or disability leave? I don't believe this is specifically answered. However, I do think that if you document this and they were previously working 40 hours a week or a single FTE, I believe Plains Commerce Bank's stance at this point is that would count as an FTE. However, again, that is not specifically addressed within the guidance. Is the bank going to be approving or denying applications? And if not, who will be reviewing our applications? That's a great question, and it's got a couple other parts to it. So I'll answer these first. The bank will be approving all of the applications. The SBA is relying on us. However, those loans over $2 million, all of the information is likely going to be passed on to the SBA, and they will also have concurrence. And then, as they stated in their IFRN, they have the ability to select any loan under $2 million as well, and look at that. The sheer number tells me that I think it's highly unlikely if you're under $2 million that you will get looked at, just due to I think the last stat I heard was the SBA has done more loans in the PPP loan process than they've done in 12 years prior. So I think with staffing considerations, I think, again, it will be unlikely that this is looked at in any short amount of time. The final piece of that is or will this be something the borrowers just certify and it's agreed to? I think the one thing that's still to come there is in the banking agency lobbies, the American Bankers Association, and as well as the independent banking associations are lobbying very, very hard for a cap that says if you're under 100,000, the borrower can certify that they did what they were supposed to do, and the bank just says yes, and the SBA forgives all of it. We're pushing for that number at 100,000 or more, and we're seeing some traction. We hope to get that in the bill, but that's something that would be a huge administrative relief as a bank due to the sheer volume of these. As I mentioned, we're over 800 as a bank, and this application, as many of you have seen, is much longer and lengthier than the one to get your loan. Do you know if SBA will require leases or just ACH check documentation for rents paid? I believe they do want to have a lease, but I think in my checklist, what I said is if you don't have documentation showing that you have a lease, a formal lease in place. What you would need to do is show proof of payment during that period of the covered period, but then also go back into February and show payment so that you can say this rent or lease was being paid back in February 15, as it has been required to be paid prior to that. As we know, there are many leases and rents paid between related parties, and there's sometimes a lack of documentation. We received our money on a Wednesday. Our payroll starts on a Friday. Can we start our wage calculations on Friday, or do we have to prorate the 2 days, then run 6 weeks of standard payroll and then prorate the remaining days? It does depend on your payroll cycle. If you pay at least biweekly or more frequent than that, you can move your alternative covered period to that Friday that you've referenced there is your first day of your pay period after you've received your funds. So the answer is, I guess, it depends, but yes. And the key to remembering that is if you are paying a payroll that was incurred prior, you can still include that as well. The next one is my firm submitted many PPP applications to Plains Commerce Bank. Can I email my list to the person I work with there to get the information I'll need to fill out the applications for forgiveness? And the answer is yes. They should be able to provide that to you if you don't have your loan number or SBA loan numbers handy with you, or disbursement dates. We have a biweekly payroll, and ADP can't provide weekly. Again, that should not be an issue. Biweekly is fine. You can use the alternative covered period if you need to, and so the biweekly payroll period should be perfectly okay. The one area where that becomes a challenge is when you go back to calculate your reference periods for FTEs. If you're using the hours from your payroll system, what I encourage you to do is pick your payrolls that most closely align with those reference periods, being January and February of 2020. Your payroll periods will not align perfectly with that. So if you want to pick, that's approximately 8 weeks, is that January and February timeframe. If you want to pick the most closely 8 weeks, we believe that that's a practical, expedient, and allowable in that regards. Is related party rent forgivable? This has been a common question. We believe yes at this point. We haven't seen anything specifically. There was some language early on in the process that made that somewhat up in the air on some related party areas. We do believe that the answer to that now is yes. If we are self-employed, can we use the full PPP loan amount on payroll? And the answer is no. And the reason is you're capped. Well, I shouldn't say that. If you decided to apply for less than you were eligible for, then you could. You're limited to 850 seconds of your Schedule C, line 31, or Schedule F, line 34. In most cases, people try to apply for the maximum amount allowable, and under those cases, you're only allowed about 75% of that amount to be used on payroll, and the rest will not. Then another question is, are there any taxable events with PPP? This one is a source of great frustration amongst us as banks. The act was very clear that the distribution of this loan to you was not taxable. However, the IRS later, in their infinite wisdom, decided to say the expenses that you are using to get forgiveness are not going to be deductible on your tax return, which in essence make this loan taxable, because if you can't deduct the expenses, it's like receiving income. I will say that is one of the big areas as well that's being discussed in Congress right now. The original intent of the act was to not have this as a taxable event. If it is a taxable, if it does allow you to no longer deduct the expenses, it's a very difficult exercise between you, the borrower, or the business, and your CPA at a later date. and two, it basically reduces the benefit by your tax rate. So if you got 100,000, but you end up paying 20,000 or 30,000 in taxes, it generally is going to be a reduction in the benefits seen by the business. If we have an owner with only distribution income in 2019 and no W-2 income, but becomes an employee owner during the covered period, how would their compensation be capped for forgiveness purposes in 2020? I would say this question is not answered in the Act. I think this one will probably require, I think at the end of the borrower is the responsible for their calculation, and it's our job to determine the reasonableness of it. I think that one is, I think we'd have to look at it more closely and understand the situation. But I think in that circumstance, you could say that you're treating that person as an employee, as they had no limit from the prior year, as they weren't paid in that year. However, the spirit of the rule for the purpose of the SBA is so that owners don't go in and just artificially adjust their compensation up to 100 if previously not making 100. So again, that would require a little more work to look at. For more clarification on S corps, are my wages as a W-2 allowed in forgiveness? The answer is yes. The wages you pay yourself as a W-2 employee under an S corp are eligible for forgiveness. They will be shown on Schedule A in line 9 under owner compensation. They will be limited to the amount that you paid yourself in 2019 at 8.50 seconds. So if you were making $1,000 a month for a total of $12,000 in 2019, you cannot make more than that in 2020 in your covered period. What reports from ADP is acceptable for your bank? I think there's a large number of reports that are acceptable. Again, it depends on what piece you're talking about. If you're talking about FTE calculations or compensation, I have worked through this calculation with several borrowers already to get a good understanding of it. ADP does have a ability to do what I think it's called a payroll summary report. It basically summarizes multiple pay periods in one document. If you then decide that you have 4 pay periods fully covered in there, you can actually run one document that has, and it looks like basically like a summary paycheck for each individual for those 4 pay periods. Then where it gets a little confusing is if you have one pay period that is partially incurred and paid afterwards, you may have to run that one separate and do a calculation. As we talked about in our analysis, as in our example, when there was only 7 of the 14 days included, you may have to run that last payroll separate and only count 50% of it in that period. This program will also work for a self-employed development company if they have lost rents on rental properties. I don't know if this is a question of, is this program? Again, the only way to apply for the loan is based off of payroll. So if the development company has a payroll attribute to it, yes. If not, then it would not, unless it's done on a Schedule C or F. If you reach all requirements within 8 weeks, can you apply for forgiveness? I think we kind of answered this one previously, and the answer again, yes, is yes. If you feel that you've met all the qualifications, then you can do that. And then one question is, how soon will you be sending the files that have that information, is what I'm guessing. And I think that will be done next week with your information with you, as well as hopefully some relevant information related to what Congress has enacted. And then we will send out an email to all of those borrowers when the PDF of the checklist has been added to our website. Again, when the checklist that we're asking you to use is out on our website, we will send emails, and that will likely be early next week. Uh, so the one of the required documents on page 10 is a quarterly 941 report, which is only able to be done after July 1. And so somebody's asking is, if I'm ready to submit my paperwork next week, except for our quarterly tax reports, is this required? Is this report required to submit for forgiveness? It does give you an out where if you have relevant payroll processor reports that can suffice and that can get us the information we need, you don't need that 941. We do recommend if you're applying for forgiveness after July or in July or later, that we please get the 2020 second quarter 941. However, it is not required if you have good, strong payroll reports. That would suffice. When should the borrowers hand in these PPP loan forgiveness applications? There is no true deadline. It has to be after your 8-week covered period is complete. But as soon as we have a complete applications, then we have those 60 days. And then the SBA also has 60 days to remit that payment on. One question, I don't know that we fully discussed it here, as I know the application as a borrower, when you do look at it, it looks as if you're only getting the principal amount forgiven. However, when we as a bank submit your request to the SBA, it does allow us to put in the forgiveness amount of all of your interest. So if your loan is forgiven 100%, it will include all of your interest. If your loan is forgiven only in part, it will be a pro rata portion of your interest that is forgiven. The FTE calculation requires weekly. It does not require weekly. You can use every 2 weeks. You would just divide by 80 then, and you come up with the same. I think their methodology is just recommending you do it on a weekly basis, but you will come to the same answer if you take your, the question there was referring to if I'm only able to get biweekly reports, how do I calculate FTEs? Can that information be emailed instead of mailed? We will look at that in terms of your information on your loan, the loan number. I do think those have to be individually done because they're all different information. I will look into that and we'll make that the preferred method if that's something we're able to do. If not, again, we'll have to go the other direction. But I will look at emailing out that information as an alternative to mail. How do I calculate profit sharing benefit on the covered period? Do I need to pro rata based on 2019 accrual of profit sharing? I think some of this comes down to your 401k plan. And if you're a safe harbor plan that requires this contribution and it's consistent each year, if you're doing it as a percent of salary, let's say 3% of salary, you can go in and calculate that 3% of salary. If you're doing a fixed dollar amount and it's different each year, you're going to have to be pretty diligent about documenting why you believe that that expense has been incurred in this period and why it's likely that you are going to do that profit sharing. The most likely case in which you can use 401k contributions that are not made is when you do an annual match that is required by your plan document. Again, in this case, it is the borrower's job to certify theirs, and so you can go in and look at what portion of your 401k match or profit share you believe is related to that 8-week period. We're not sure how to calculate monthly accrued interest. Will the bank be sending monthly statements to its clients? I do have Chris Wasman on this with me. I'll let him jump in if he knows that answer. I do not believe we send monthly accrued statements on PPP loans. However, you should be able to accrue this at your balance times 1%. divided by 12 on a monthly basis. That should get you close. If you're doing it for your accounting records, do remember that there's a good chance that this amount is forgiven, so it wouldn't need to be accrued as expense. And so
you are correct, Josh. There are no statements going out on these.
Okay. No. So, however, if it is very important that you have that exact amount, I would recommend you work with your loan officer, and they'll be able to give you that amount from our system. And they'll actually be able to give you what we call a daily accrued interest amount, and so you can know what interest is accrued each day. And then also, can we calculate FTEs for the whole 8-week period? We do so semi-monthly, so it is really hard to do bi-weekly or bi-weekly. In fact, the calculation that I've developed myself is looking at the full 8-week period and just using the hours, and then over that 8-week period, divide by 8 to get the average hours, and then dividing that by 40. So the calculation that I've developed in the model that I have today is doing exactly that. It's taking in the same thing for your reference period. If your reference period happens to be close to 13 weeks, I think is the one in 2019, if you talk about February 15 to June 30, the simplest way of doing that is taking your hours over that whole period for that employee and coming up with an average weekly and then dividing that by 40. So again, I think that's a very much an allowable option on the calculation of FTEs.
And we do have a couple questions in the chat side, Josh.
Okay, let me hop over to that if I can find it. One is we pay, I think we talked about related party interest or rent, so we'll skip that one. We pay mileage to all of our caregivers, which I think in this case will be employees weekly. This qualifies for transportation under non-payroll costs, and the answer is yes. Even though you oftentimes pay mileage reimbursements on a paycheck, those are non-taxable cost reimbursements. And they would be a qualified transportation cost and included in that 15 or 25% non-payroll costs. Another one was my amount was based on a 1099 amount, not Schedule C line 31. And the answer to that is the guidance question and answer 20 from the original question and answer that kept running on and on and on, talked about how you don't have to go back and make changes if new guidance comes out. So those oftentimes if you were in a sales related business like a realtor and an insurance agent, you had options to at one time calculate your amount based on 1099s. That subsequently changed. You were grandfathered in for your loan amount. You are, however, not grandfathered in for your forgiveness. You will have to go back and look at your Schedule C, line 31, and calculate your maximum related to payroll. Again, great question. The owner-employee is capped at $15,385. Does it mean I can't add the profit sharing or 401k? Again, I think this depends on what type of employee you are. If you are a self-employed or a partner, there is no profit sharing or 401k that you can add related to yourself. If you are a owner employee, which would be anyone at this time that we believe is a W-2 receiving owner, it does say that you can use profit sharing or 401k. The part that we do not, there is no clear guidance, and I've looked at several different accounting firms, including Bailey and BKD, and they all allude to the same thing, is there's no clear guidance on if that amount is included in the cap of $15,385. So I do not have that answer right now in concrete form. I know it's allowed to be included, but we're not sure, again, if that's subject to the cap of the $15,385.
that is all the questions.
Well, I just want to tell you guys again, I know for those of you who look at this as daunting, Plains Commerce Bank is committed to helping you throughout this process. You know, this has been a challenging yet fun experience, you know, in doing this. We ask for your patience, but we do intend to help as much as we can. And so, yeah, I appreciate your guys' willingness to come on. This helps us get the message out to a large group all at once. And then the last thing I will leave you with before you go is if we end up getting substantial guidance or changes that require an additional live discussion, we will do that. And we'll send it out similar to we did today. And also we will likely have a Zoom call to go through a forgiveness calculator. If we do issue a forgiveness calculator, we will go through how to use that in a detailed fashion, again, when we're able to distribute that. So I hope you all have a great afternoon and appreciate your time. And hopefully that we can do everything we can to help you through this process.